for a decade, telling investors he was going to put a mine into production, and he did it.
In full production, we'll produce over 200,000 ounces per year. Life of mine, all-in sustaining costs will be less than $800. Certainly at $1,800, you know, the NPV goes to over $2 billion.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome. My next guest is the CEO and president of Victoria Gold Corp, Canada's newest producing gold mine, Mr. John McConnell. Enjoy.
Okay, guys, Jay Martin here, CEO of Cambridge House, and we are searching for our next gold investment. I'm really excited to have our next guest on the show because often, you know, we're talking to high quality companies, and one thing that I hammer is, you know, this is a management team that told shareholders they were going to do something and then followed through and did it. And John McConnell, the CEO and president of Victoria Gold, has been coming to Cambridge House conferences. So I'm really excited to hear the story from John, and have John, you know, have you share this with our audience, because it's an exciting story and Canada's newest producing gold mine. So thanks so much for coming on. How are you, John?
Yeah, no, I'm good. This is great. I never get tired of talking about Victoria Gold and our Eagle Gold Mine in the Yukon.
Excellent. Okay, well, I want to jump into it, and you know, let's start with a bit of a backstory. You know, when you acquired the property and what you saw that struck your attention, and how you developed your game plan to push this project forward.
Yeah, so you know, the story starts with a fellow named Hugh Agro, who was, in 2007, he was the executive vice president of Kinross. And Hugh and I had known each other because he had been an investment banker with Deutsche Bank. And I was with Windspear Diamonds when De Beers made a hostile takeover. So I got to know Hugh, who is a mining engineer, but also has an MBA, and, you know, was an investment banker, and then went to Kinross. And I had been running a company called Western Celtic. We had a zinc copper property in northwestern British Columbia. And we had just sold the company to Sherwood Copper, now Capstone. And Hugh phoned me up and said, "So what's the plan now?" And I said, "I don't know. I haven't got any plans. I was thinking I'd take it easy for a few months and then start looking around for another job." And he said, "Well, have you ever looked at a property called Dublin Gulch up in the Yukon? It's, you know, a twin for our Fort Knox deposit over in Alaska." I said, "No, I've never heard of it." He said, "Well, I'm going to send you some information. You read it, tell me what you think." And so I did, and I said, "Oh, it looks quite interesting." You know, I liked the fact that it was an open pitable deposit. At that time, I think there was, you know, a resource on it, and a PEA had been done. But, you know, so Hugh said, "Well, why don't you come up? I'm going up to Fort Knox in a couple of weeks. Why don't you come with me, and, you know, you can see Fort Knox and get a sense of it, and see what you can apply from there to Eagle." So I did that, and Hugh and I went back and forth, and, you know, eventually contacted Strata Gold, and they weren't interested in doing anything. They were doing their own thing, so we just let it be. Then Hugh came back to me about a year later and said, "You know, we've inherited this company called Victoria Resources. We have a bunch of assets in Nevada, early stage. Would you consider joining the board with me?" I said, "Sure, that sounds interesting." So joined the board, and, you know, at one of our board meetings, Hugh raised the idea of having a look at Dublin Gulch again. And so we, you know, looked at it again, and again, Strata Gold wasn't interested in talking to us, so we carried on with exploration in Nevada. And then, you know, the economic crisis of 2008 hit, and that things got pretty slow, and we approached Strata Gold again, and they were a little more interested this time because nobody was able to raise any money. And we finally reached an agreement to acquire Strata Gold in early 2009, probably the day they couldn't make payroll. And we acquired Strata Gold for, I think it was around 11 million in Victoria paper.
Okay.
So that deal closed in June of 2009, and then the Eagle project became ours. Shortly thereafter, I became CEO of Victoria, and we made the decision to sell off our assets in Nevada and focus on the Yukon. So we were fortunate. We, in 2010 and 11, we raised close to $50 million from the sale of those assets in Nevada. It was great timing. And we used those to develop Eagle. Go back in, start the permitting, engineering, do the definition drilling.
And you stuck to your guns on those sales. I think they were all cash. Is that right? There was no stock.
Yeah, no, everything was cash.
Got it. Now, from the jump there, so you're cashed up, new property, but you knew, the way to grow Victoria wasn't through acquiring anything else. It was to focus on Eagle, which is the mine right behind John in the picture right now. So what gave you the conviction to go all in on Eagle?
Again, I think at that time it had a resource of, over 4 million ounces. And no, actually it was 6 million ounces. By the time we redid the resource, we had cut it back to closer to 4 million ounces.
Okay.
And, it was just a very consistent deposit that was right on surface. So we knew the strip ratio would be very low. We saw what Kinross was able to do at Fort Knox. And so we started looking at heap leaching in the north. It worked beautifully for Kinross. So, we did another, I think we went then straight to a pre-feasibility study based on heap leaching in the north.
And when was that?
That must have been maybe 2004. No, not 2000. What am I saying? 2014.
Yeah. Okay. Got it. Now, timing is so critical in this business. Was there any benefit to you? Because you pulled the trigger on mine construction. It would have been like 2018. Is that right?
That's right.
That's right. Okay. Any benefit to that timing, John, or were you this is just the next organic step?
Well, we pushed hard for 2018. We finished the feasibility study in 2016. 2017, we were out trying to raise some money, and talking to traditional banks, talking to PE firms, talking to all the streaming companies. And we really felt there was a window where, as a junior, we would be able to get the A team in terms of engineers and contractors, because there was just not a lot of mine development going on. In 2017, it didn't look like 2018 would be any better. Companies just weren't able to raise money then. So, we were working on the financing, going down a couple different paths, and by the end of the 2017, we had a plan in place and got it board approved, and we eventually did the financing with Orion, Osisko, and Caterpillar.
Right. Yeah, that's an interesting bullet point, because it would be a much different landscape to try to attract that talent today. And probably even different in 2016. So there's a nice window there for you where you could pick up the top tier teams. Now let's jump into the economics of the mine a little bit, John. What are some highlights that you want to share with us?
Yeah, I think, in full production, we'll produce over 200,000 ounces per year. life of mine, all-in sustaining costs will be less than $800. So, you know, we did the feasibility study at $1,250, so that was a pretty nice margin. But certainly at $1,800, you know, the NPV goes to over $2 billion, and we'll be cash flowing over 200 million per year.
That's
if it stays where it is.
Yeah, if we sort of level right here, if nothing changes, you'll be cash flowing too. And gold could drop down to what, 1,300, you'd still be cash flowing 100 mil a year or so.
Yeah, well, you know, as I say, the feasibility study was done at $1,250.
Was done at 12, yeah, of course. Okay.
And, you know, there was a decent IRR and a good NPV at that. Times have changed a little bit. You know, we've seen some inflation and, you know, some things have gone up, but, you know, things like fuel have come down in price. So, you know, it's probably not as economic at $1,250 as it was when we did the feasibility study in 2016, but
sure,
still a good project. You know, the banks, when they were testing their models, they were using like $950 gold, and they were still willing to lend us money.
Got it. Okay. So we're looking at around 200,000 ounces of gold production per year, $800 all-in sustaining cost. And so with the current resource, John, what's the lifespan of the mine?
The current reserve, it's good for 11 years at, again, $1,250 gold. At current gold price, my gut tells me we probably add another 10 years of mine life. And that doesn't even include the exploration potential.
Well, let's talk about the upside there. Yeah. So you're adding ounces currently?
We're exploring. You know, we have a large land package in the Yukon, over 550 square kilometers, and Eagle's right in the center of it. And it's only the last couple of years we've started to step out from Eagle and look at the regional potential. And we've now identified 12 or 13 targets that we'd like to explore over time. And the focus right now is a target out to the east called Nugget. It's another large granodiorite intrusive with very similar characteristics to the intrusive that hosts Eagle. So we built a trail out there in 2019 and did some trenching, came back with some really good results, a lot of geochem, and we had a shortened exploration season this year, but we were out in the field in mid-July, and we drilled 35 holes and have a new discovery we've called Raven on the southeast corner of the Nugget granodiorite. What's really interesting about it is it's multi-gram. Particularly, you know, you consider Eagle is 0.65 grams per ton. We're seeing many, many intercepts, multiple meters of +2 grams. So it's got everybody in the company very excited. And while it's still early days, there's certainly, my feeling is we've got another mine development out there.
Interesting. And to fund your exploration activity, are you going to have to go back to the market for capital, or you're comfortable with Victoria?
No, I think we'll probably fund it out of cash flow. You know, flow through shares are obviously very attractive, but you know, you use up tax pools with flow through money. So, you know, now we don't want to use up our own tax pools with raising flow through, so we'll probably self-fund it out of cash flow.
Okay. Now, I've seen comments from a variety of teams. I think PI Financial, BMO, Cormark have all argued that you're still quite cheap compared to your peers, and maybe anticipating a re-rate, I guess, as you move towards full production. Any comments on that, John?
Yeah, I think, we've still got some work to do. The mine isn't running at full tilt yet. Um, all of the, as our general manager likes to say, the pots and pans are all working. Some of the connections between the pots and pans that aren't. So, in our case, mining is going extremely well. Primary crushing goes really well. But in the secondary and tertiary crusher, the crushers themselves are working very well, but we're experiencing much higher wear than we anticipated. So the rock, the ore is far more abrasive. So we're working through a system now of changing the design of some of the feeders, replacing liners with harder material, or in some cases with rubber or ceramic liners. So that takes time. And so we're not quite at full production yet, but most of that work should be complete by the end of the year. And I'm not providing any guidance yet for 2021, but it'll be much closer to a full year of production.
Okay, copy that. Now, talk to me about management skin in the game, John, and insider ownership.
Yeah, we didn't IPO this company, so none of us got a bunch of founder penny stock. So every share I own, I've purchased in the market. I own about 1% of the company now. Our chairman, Sean Harvey, he owns about 0.5%. And I would say all of the directors and officers have purchased sizable positions in Victoria. So yeah, we certainly have skin in the game. And I think more importantly, our interests are fully aligned with our shareholders because we put our money on the line as well.
Yeah, you purchased those shares. That's key. Any other cornerstone shareholders or investors that you'd like to mention, John?
Well, certainly, Orion Mine Finance, I can't say enough good things about them. They came in and were a lender and an equity buyer when we needed to finance the construction of Eagle. And, we talk informally once a week and formally once a month, and they've been a great shareholder. And then, after them, it's a real blue chip group of institutions that own the stock, Fidelity, BlackRock, Century, CI, all great shareholders.
Now, one last data point that I just found so fascinating about your story is that, guys, you're looking at the IR team for Victoria Gold right here. This is it, right? That's the case, right, John? Yourself and your assistant, you handle investor relations and always have for the company.
Yeah, well, I press my wife into duty once in a while too.
Right.
But she's getting busier and busier running her own junior exploration company, so can't rely on her. But I do have a funny story if you've got a minute.
Definitely.
One time I was marketing in London and was on my way to the precious metals show in Zurich, and my wife Tara was also participating in that show, but she was flying direct Vancouver, Toronto to Zurich, and I went to London earlier.
Yeah.
And I go to the airport in London to fly to Zurich, and my passport has less than 6 months time left on it. So they won't let me go to Switzerland.
Aha.
So I go the next day and talk to them at the Canadian Embassy, and they pull miracles and get me a passport in 2 days. But that wasn't soon enough because my presentation was the next day. So I phoned up Tara and I said, have you got a copy of my presentation? And she said, yes. I said, you're getting up in front of everybody. And she did it. So yeah, she helps out a little bit once in a while, but otherwise, Lenora is my back room, and I do all of the IR.
Yeah, and she's great to work with, by the way, just from an outsider's perspective. It's always been a pleasant experience dealing with your team. Now, I'm just curious, your wife, Tara, runs her own junior exploration company. Is it
Banyan Gold.
Banyan Gold, okay. I didn't know that, John. Fantastic.
Oh, well, we met in the Yukon. So when I first came up here 12 years ago, I met Tara. And, she's a mining engineer as well. And she was running a placer mining operation with her family when I met her. And I got her intrigued in the junior mining space. And now she's running her own junior and sits on the board of a couple of other mining companies.
Got it. Very cool. Okay. So yeah, great catching up with you. I'm really glad that we could hear the story from you. Victoria Gold is Canada's newest producer, 200,000 ounces per year, forecasting the cash flow around 200 million this year based on current gold prices. And what we can look forward to is, I guess, news coming out of the Raven exploration program over the next 12 months. Is that correct?
That's correct. And, quarterly updates on production and cash flow and all that good stuff.
All that good stuff. Yeah. And it's, if this gold market continues to heat up, everybody watching this probably has consensus, agrees the macro trends supporting the gold narrative haven't been stronger. So lots to look forward to. John, look, it's been awesome catching up with you. I'm so glad we had you on the show and my audience could hear the story directly from you.
Thanks, Jay. Pleasure.
All right.